That we get Sushovan in. Sushovan Nayak is research analyst at Anand Rathi Institutional Equities, who tracks the space. Sushovan, very good morning to you. Do you think there's a positive surprise in HCL Tech, or was this largely priced in? And also, the reportage of AI revenue separately, how does that help you as an analyst to understand the company better?
Thanks, Tamana. I hope my voice is audible.
Yes, it is.
So, Tamana, the way to look at it is, I think this is the first Indian IT company which has been reporting the advanced AI revenues to be precise. Now, if you look at what Accenture has been doing now, at least it is going on the path towards Accenture, because if you look at Accenture's FY25 numbers, which ends in August, I believe almost 4% of the revenues is basically AI related revenues, and 7% of their bookings is basically the AI bookings. Now, uh, now, when you are doing this quantification with advanced AI, you are basically giving an indication to the market that this is what our advanced AI revenues are. And this does not include your table stakes data and analytics sort of revenues, but actually your agentic AI workflows, right? So this is actually a very positive news as far as Indian IT is concerned. Possibly this is a precursor to a large number of other IT companies doing the same thing from a disclosure standpoint. And if you look at HCL revenues, it has been a beat both as far as revenues are concerned, because I understand the street was almost at 1.4 to 1.5% CC growth. They have actually delivered 2.4%. A beat even on margins. It was expected to be close to 16.5 to 17. They've actually delivered 17.4 to 5% EBIT margins, right? And even if you look at it from a TCV standpoint, I think there also it has been a beat, because almost $2.6 billion is their quarterly TCV, with 9.5 being their net new LTM TCV. So overall, in my view, a very good set of results. And as had been pointed out by one of the folks here, is I think the growth also, if you look at it, it has been a growth which has been all round across all the verticals. But one interesting aspect is also that the healthcare vertical has shown growth to the extent of 4.5% sequentially. Even if you look at TCS, this also has been the same case. I think it was around 3.5% sequential. So possibly this may be an indication that the payer segment, which was under pressure in the US, we may be seeing an inflection point there. And BFSI obviously continues to do well. I think the company had mentioned BFSI and high tech. Both of them continue to perform well. Uh, yeah.
In terms of also the fact that the attrition has fallen and their net hires are better than peers, do you see that as a positive, Sushovan? And do you think that the stock will respond well today? What would you do with the HCL stock today?
Uh, I'll not comment on the stock, but overall, as I said, it has beaten expectations. And the other bit is, if you look at the hiring, right? Uh, uh, Primarily, they have added 3,500 folks, of which 5,000, close to 5,200 is basically your fresher folks which have been added, which was almost in line with what they had done the last quarter too, which basically indicates the fact that they are resorting to pyramid rationalization to improve the margins, and also the fact that there is a pipeline of deals which need to be executed, which gives us at least a positive view as far as the future is concerned, from an execution of deal standpoint, right?
Okay. Sushovan, morning, Hira this side. So between a TCS and HCL Tech, the commentary that you've heard so far, and the scale up, HCL Tech is looking at an asset light model. TCS is going heavy in terms of the data center business. You're talking about, HCL Tech, which is talking about AI revenues to the tune of around 3%. What does this actually tell you? Where are we going in terms of the sector from here on? And what is more promising between the two of them? And you have a Tech Mahindra that will be reporting earnings today. So what should you watch out for?
So I think to each his own. HCL Tech is obviously resorting to the asset light model, and the fact that they have been able to deliver, they have got a more diversified segmental exposure, both into ER&D, they are into IT services as well as software, which actually is a very positive thing from an HCL standpoint, from a diversification of segments are concerned. As far as TCS is concerned, I think this is possibly a precursor to what other companies or other IT companies may end up doing, because data center is obviously a growth segment as such. And I believe what they mentioned during the con call, that they would be uh, adding certain financial sponsors for that business, which would also be positive from a TCS standpoint. In addition to that, what I understand during the management commentary, they would continue to resort to buybacks. So all of that would possibly act as a floor with a limited downside. And with the data center, we'll have to see the execution part, right? And whom do they bring in as the partners, which will basically give us more confidence. As they said, the revenues are not going to translate in the next 18 to 24 months. So this is what we will need to see, whom they onboard as their financial sponsor partners. Plus the acquisition which they had done, that is also something from a Salesforce implementation perspective is a positive as far as TCS is concerned. HCL Tech, I believe, as I mentioned, it has been a beat on most fronts from an execution perspective, and the pipeline that is there, the leveraging on AI that they have been able to do, all of them are super positives as far as HCL Tech is concerned. As far as TechM is concerned, I believe what we would want to look at is the margin trajectory, because obviously, as we are aware, this is a low discretionary or a weak discretionary demand environment. So I think the focus of the management has been clear that they would want to improve the margins, and with the discretionary demand picking up, I think they will focus on the growth hereafter. So at least from an execution standpoint, they're doing the right things. So those are the two things I would watch out for. What is the growth? What are the margins? How do they, because they were supposed to deliver 50 bips, and what exactly is the TCV of the deal wins? I think those were the three things I would consider as monitorables.
Interesting. The TCV deal wins, margins, key to watch out for Tech Mahindra as well, that will be reporting earnings, and a very divergent business models that you're looking at between a HCL Tech and a TCS so far. But thank you, Sushovan, so much for joining us on the show. Always a pleasure.